The market is an absolute bloodbath. Panic is setting in. And right now, everyone's searching for a reason why. But what if the story everyone is telling is completely wrong? What if this isn't random chaos, but a planned attack?
Look, selling your crypto right now could be the single biggest mistake you make this entire cycle. These massive dumps we're seeing, they aren't random. They've lined up perfectly with every single major XRP ETF launch. Now, by the end of this explainer, you are going to understand the institutional playbook that's designed to shake you out of your position. And more importantly, you'll see the one key indicator that signals where the market is really headed.
All right, first things first, let's survey the damage. You don't need to be a chart wizard to see that the market is screaming. It's a story of pure, widespread panic. And the evidence is just everywhere. Bitcoin has smashed below that crucial $90,000 support. The entire crypto market cap? It's bled out billions, now sitting below $3 trillion. And get this, in just 1 hour, 60 minutes, over $400 million in leveraged long positions got absolutely liquidated, wiped out. The sentiment out there is exactly what you'd expect, total fear.
We can actually put a number on that fear. The Crypto Fear and Greed Index has just cratered to 24. And let me be clear, that's not just people being a little cautious. That is deep in extreme fear territory. That's the zone where rational decisions go out the window and people just start dumping everything they own. And you can hear this feeling echoing all over the place. You have analysts like James Wynn saying we're not even at peak panic yet. He thinks we're just in the anxiety and denial phase, and that the real capitulation could drag prices all the way down into the 40s or 50s. But is all this fear actually justified by the news?
Which brings us to Exhibit A, the usual suspect that gets blamed for every crash: China. Once again, the headlines are all about another crypto ban. But is China the real villain here, or just a convenient smokescreen?
So the story that dropped right as the market started to tank was this: China's central bank is reaffirming its crypto ban. Now that sounds pretty scary, right? And the timing seems a little too perfect. But if you've been in crypto for more than 5 minutes, this whole thing probably sounds, well, a bit familiar.
Let's just take a quick trip down memory lane. China has been banning crypto for what feels like an eternity. 2013, they banned banks from touching Bitcoin. 2017, they shut down exchanges. 2021, another ban, and another one. This isn't breaking news, it's a recycled headline they pull out whenever they want to stir up some fear. Okay, so you have to ask yourself the obvious question. If these China bans were really the market killers they're made out to be, what does history show us? What happened the last dozen times they banned crypto?
Yeah, not what you'd expect. In fact, it was the complete opposite. Right after that big wave of bans back in 2020 and 2021, the market went on one of the most insane, face-melting bull runs we have ever seen. So this tells us these headlines are weapons of fear, not indicators of reality. So, if it's not China, we need to find the real culprit. All right, so if the China news is just FUD, just noise, then what's the real signal? Well, the source material we're looking at points to a pattern of manipulation so precise it's almost impossible to believe it's a coincidence.
Seriously, think about it. If it's not some recycled news from China, what else could be causing these vicious, perfectly timed market dumps, the kind that seem to happen again and again? The answer, believe it or not, might have everything to do with XRP.
This is where your jaw might hit the floor. The source lays out this incredible correlation. Just look at the pattern. Canary Capital's XRP ETF launches, the market dumps. The Bitwise ETF launches, another deep sell-off. Okay, Grayscale and Franklin Templeton launch and we get a pump, an interesting outlier. But now, with a rumored 21 shares ETF about to launch, we get another massive market-wide dump. You see this? This isn't just bad luck. The source says this is a clear case of manipulation.
So here's the theory in a nutshell. This isn't random market panic. It's a playbook. The idea is that huge players are using the hype around these ETF launches as the perfect cover to slam the market down. And why would they do that? Simple. They trigger mass panic, shake out all the retail investors like us, and then, this is the important part, they get to scoop up assets for themselves at a massive discount.
Okay, so if fear and manipulation are creating all this chaos in the short term, how do we see past it? What's the real, fundamental force that's going to decide where this market goes next? It's not the headlines, it's not the fear, it comes down to one word: liquidity.
Just think of liquidity as the fuel in the market's engine. It's the amount of capital, the actual money, that's available to push prices up or down. When liquidity is high, when there's a lot of fuel, prices can soar. But when it dries up, like we've been seeing, the whole market stalls out no matter how good the news might be.
And this right here, this is the ray of light that cuts through all the fear and noise. The source material points out that the financial tides are about to turn. Market liquidity, that fuel for the engine, is expected to start improving this very month. This isn't a small change. This is the underlying force that could reverse this entire negative trend.
So that brings us to the most important part, the actionable takeaway. With this manipulation theory in mind, and knowing that liquidity might be returning, what are the actual price levels we need to be watching on the charts?
Okay, it all boils down to two critical lines in the sand. Think of them as lifelines. For the entire market, Bitcoin absolutely must hold its previous lows from April. If it breaks below that level, this whole reversal theory is probably off the table. Then for XRP specifically, the key is the weekly candle close. It cannot close below $1.89. If it does, that could signal a much, much deeper correction is on its way.
And that leaves us with the billion-dollar question. Is what we're seeing a brilliantly coordinated shakeout to steal your crypto right before the next massive run-up, or is this the actual beginning of a long, painful bear market? The answer isn't in the headlines. It's in those levels we just talked about. They will tell the real story.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.